But the context of it, right, is really how can you filter out some really safe, safest companies, steady compounders that are very safe companies that are growing at maybe 20-30% growth rate. That means if you can compound your your funds not at the best rate possible, you are not aiming for the best returns over here, right? You can't expectations and reality, you cannot have the best returns just by putting 5 minutes of work. But if you put in 5-10 minutes of work and you can have a good 15-20 minutes a good 15-20% returns year on year, that is not too bad too, right? So that is the context for this sharing. All right, so let me ask you, right? So let's say I change the analogy, right? Let's say today I do not know anything about a field. Like some of you might be totally new to investing. So let's say I'm totally new to, let's say, fitness, and I want to find, just for curiosity's sake, right? I want to find who are the fittest people in the world today. Where do I go and find? How do I start finding these people? Because I know nothing about fitness. Let's say that, right? Just to change the context a bit, right? What I can do is perhaps I can look at who are representing the Olympics right now, representing their countries, who are at Tokyo right now. So these people tend to be, I would say, pretty fit, right? If they can represent their countries at the Olympics, they tend to be pretty fit. They know what they are doing in terms of fitness and working out and all that, right? So similarly, in the investing context, how do I find the best companies in the world today? Like, where do I start if I am totally starting from ground zero? So one way is I can Google, I can do a filter. So if you just do a simple Google, there's different ways you can Google. You can different ways you can filter. You can filter by revenue, which are the largest market capitalization companies and all that. So what I like to do, right, is I will go to this website called Finviz. So Finviz is a financial website where I seldom use it right now, but I used to do a lot of filtering from here last time. Let me admit. Okay, so can you guys see my screen at Finviz and can see clearly the screen? So 5-minute shortcut, right? You go Finviz, and then on the tab here, there is screener. You just click screener. All right, so here you can screen via like any metrics you want, any financial matrix that you want to be filtering on. But for simplicity's sake, right, just to keep this short, right, I will click market cap, and I want to sort these companies by their market capitalization. That means which of these companies are the biggest, right? So if you were to do this filter, then obviously the top companies on the left here, you can see will come out like Apple, Microsoft, Alphabet. So this is where I will do a simple filter to get the biggest companies, the safest companies outright, and then I will do the filtering there. So from these companies, right, there is a few things that I will pay attention to. I will find companies that, okay, firstly, right, my circle of competency, I will find companies that I personally use the products. So for example, if I don't even use the Apple phone, then although Apple might be one of the biggest company out there, but then I might not, want to invest in it, right? And also, I will find companies that are the top 1 or 2, like I would say they are biggest leaders in their field. So for example, if I can invest in, as an example, right, if I can invest in Nike or Adidas, then why should I invest in Under Armour? Right? Not that I cannot, but there must be a clear reason why am I choosing Under Armour over, say, a bigger brand like Nike or Adidas, right? So I will go through this list, and I want to find ideally a company that has a monopoly over their sector, right? So Apple, they are one of the largest companies, but not everyone uses an Apple phone, right? So some of you do, some of you don't. Personally, I do but some I know like perhaps 50% of Singaporeans around me don't, right? But most of us will use Google, right? Some of us don't use Google, but I would say 90% of the population, when you want to search something, you use Google, and you want to buy stuff, Amazon is the way to go, right? So I want to find a company that has a clear monopolization over their industry. So this is one thing I look at, whether are they the biggest companies in their industry. And secondly, right, what is very important is I will look for companies that are in a very good secular trends. That means over the next 5-10 years, right, what is trending up, right? So obviously, you don't have to be a like investor. Let's say you know nothing about investing, but you can see the people around you. Most people are shopping more on their mobile phones or online, right? You know that e-commerce is on the way up. So you know companies like perhaps e-commerce or will be going up, and you might know that, let's say, more data, right? So we went from 2G to 3G to 4G and now going into 5G. So faster speed means more data. More data also means like maybe more data security is needed, right? So these are some of the ways you can spot the trends. So this is how I will look through these companies, and I will see, so I will filter them according to some filters in my head, whether are they the biggest, are they the industry leaders in their field? And secondly, right, are they in a growing trend? Right. So for example, Starbucks could be, they are the best in their industry, right? But are they in a field where is on the rise? Maybe not, right? So it's less clear. So if it's less clear, can I invest in Starbucks? Sure. But can I find a clearer, like a surer horse to place my bet? So this is what I'm looking for. I want a distinct and clear outright winner over here, right? So this is where I do a simple filtering, and then I will look at the numbers, right? So how do I look at the numbers, right? So let's say I filter stocks, and let's say I like Amazon, right? So I will go to this website called MorningStar. It's just here, right? But let's say I just start from scratch. So morningstar.com. And usually I will use the US version. So there's like morningstar.sg or morningstar.com.sg. Usually I don't use the Singapore version. I just like to use the international one. And I'll just type the company symbol or company name, Amazon, right? So I just click on it. And so what am I doing? I'll look at the numbers. All right, there are certain key metrics that I want to look at just to get a sense, because it's a 5-minute shortcut. So I can't look at every number over here, but in the 5-minute filtering, shortcut filtering, right, there's certain numbers that I will pay more attention to, right? So I will click on key ratios and full key ratios. So the data will load. So what am I looking at? It's not a particular number, but I want to look at it across a period of years. So for example, you can see over here, they will filter the data according to year. So from 2011, 12, 13, so and so forth. And so 3 key metrics, right? Number 1 is obviously the top line, which is the revenue, because revenue is the bloodline of the company. No money coming in means, how, then it's like the most basic thing, right? So revenue. And what am I looking at? I want to make sure the revenue is on the trend upwards, and ideally they are growing at maybe a good at least 15% growth rate for the revenue year on year. All right. Obviously higher the better. 20%, 25%, 30% is always good. All right. So like from here you can see their revenue is on a very nice curve, all right. 80,000, and then they start to double, and you can see over a 10-year period their revenue went up like what, 7x or 8x, 8 times, right? From 50K to, let's say, 350K. That is a 7x increasement. So very nice return. And I want to know, how was it faring during COVID? Was it affected by COVID? Because like last year and also this year. But you can see that the revenue, like if you look at the data, you can't tell there's COVID. Like let's say you are alien, you came to Earth, and yes, you look at the data, you don't know there's COVID. You can't really tell, right? So revenue is doing great. So I will know that this company actually is not just COVID resilient, but it also do very well. It excel in a COVID environment, right? Which is great, right? So revenue is the top line, right? Money coming in, but the money coming in, does it translate into profit? So how do I know? At the end of the day, the bottom line got money or not? So I look at net income, all right? So it was negative for 1 year, right? But you can see it grows in negative for 2nd year. So this was the period where they were reinvesting a lot of their money back into their businesses, right? So it's understandable that it was flat for a while, but after that, once they become a cash cow, you can see the last 5 years, it really just go up, and it's not like a linear graph; it's exponential, right? From 600 to 2003, 3000, and this is in, I think, millions or billions, all right? And then like over the last 2 years, it does double, and this is a trailing TTM is a trailing 12 months. Okay, so revenue, net income. And I want to make sure the cash flow, so free cash flow, is also positive. And also, so free cash flow for me, right, it doesn't have to keep going up, like keep trending up and keep increasing, because sometimes the company hold too much cash, also not good. So I prefer them to reinvest into the company. But if you just maintain a very healthy, positive level, I think that's fine. That is really great. And so I use free cash flow more as a red flag, a potential red flag, to see if there's any problems in the company. Because if there's any problems in the company, usually the first thing that will happen is there's all problems, right? And the company will need to spend money on this problem, be it like do a PR campaign, to invest into more assets and all that. So the free cash flow will be the first figure to go down if the company is in trouble. So when I look at the free cash flow and the free cash flow is not going down, that means the company tend to be okay lah, right? Not in any trouble, so on and so forth. And you can see over here the free cash flow is actually going up, which is great. So revenue trending up, net profit going up, and free cash flow positive. If trending up is great, but if not, at the very least, it's not going down like severely, then I think it's fine. Okay, and at a quick glance, right? If I want to know year on year how much growth, I can click on this grow button, and then it will compound for me lah. So you can see Amazon over a 3-year period, 5-year period, 10-year period, any period you want, is always growing at a good 20 to 30%, which is very comfortable for me. So Amazon, one of the largest companies in the world, they have a very strong economic moat, protecting the company, and even at such a big size right now, they're still growing at a 20, 30% growth rate. Right. So if you are new and you just started, and like Amazon will be a good company for you to kickstart your investing journey. Right. So this is Amazon. Those of you who are a bit more visual, so I'm just using Morningstar as an example. Those of you who are more visual, you can use this website called HyperCharts. Sometimes I use it also. So using Amazon again as an example. So I can filter and then they will sort by, this is by quarterly or annually. So if you're more visual, you want to visualize and you want to break down some figures, this is a more in-depth way lah. So you can see like their AWS is like growing really well. So there's a lot of spin-off when it comes to it. A lot of people say, hey, but e-commerce, how much can it grow? Well, it's still growing a lot. At the same time, there's a lot of spin-off that can happen from other things also. For example, they create AWS, and you can see the growth from 1.7 from 4 billion. This is like the investor dream, right? Like it just go up like that, very so in terms of the share price, there might be volatility, but in terms of the business, there is rarely any volatility. So you want to find business that is be it COVID or not, the business is just keep going up. Right, so this is something that you can look at. So HyperCharts is just another website for you to look at, and you can see their gross margins is always, quite up there, like hovering around 40%. And revenue year-on-year growth, even at their lowest, they were growing at 50%. And this is like one particular quarter, but if I were to filter like year, right, it should be average like 20, 30%. Right, so this is a short example. How many of you think Amazon is a good company? Like you look at this, hey, you say it's not bad. So we quite maybe I can spend a bit more time to invest in it. But at least this 5-minute filtering, right, will give you some information that you will need, all right? And again, right, just a reminder, we are focusing on the businesses. So in the short term, definitely the stock price will not be reflecting on the business. So the business is growing like very nicely, right? But the stock price over the short term, it will fluctuate. That is where opportunities will be created for you. Because if I see the business is growing up, let's say over the last 3 to 4 years, but let's say, example, if Amazon share price is flat over the last 3 to 4 years, then that will be a good buying opportunity for me because the share price have not reflected on the business. All right, so just using another example. So let's say over here, maybe you guys can choose like which company you all like for me to, you guys have a company in mind, I can use that company to do a demonstration. All right, so again, the context here is I want to find very, very safe companies. They are like market leaders in their industry already. They have been there, done that. They have already passed the growing phase. So not like Tesla where it's still a bit more volatile. But if you want to find the safest companies, right? So I will be looking for companies that are already at the peak. All right, so these are the companies that I'll be looking at. So let's say I use Google as an example, right? So GOOGL. So again, this is Morningstar. I go to key ratios and then full key ratios. So again, what am I looking at? I'm looking at revenue, net income, and also free cash flow. Right. So so right now I'm showing you maybe a positive demonstration, and later I will show you perhaps a negative demonstration. How can I use this filtering to filter out companies that are not doing well? Because every company I show is like doing okay. So later I will show perhaps a negative demonstration, so you know what to look for if you spot like bad companies. Okay, so revenue. So that is 40K, 50. You can see it's trending up, right? Like this revenue growth. Do you think it's like good? I think it's not too bad, right? And exactly from 161 to 182 exactly is how many percent growth. I can count manually, or I can just click on the growth button here, and then over here you tell me lah. All right. So you can see using a, let's say, 3, 5, 10-year average is roughly about, over the last few years, about 20%. You want to be conservative, 18%, 15%. So not too bad, right? Does it translate? So the revenue is growing great. Does it translate into net income? Yeah, the net income is also growing really great. All right, you can see over here, right? It's also growing roughly the same pace, 18%, 20%. Free cash flow, don't have to be too much, but is it at least positive? Just trending upwards a bit, not too bad, right? So this company is solid, right, based on the numbers. So how I look at companies, right, is qualitative and quantitative. Qualitative means, a bit more on what the company is doing. So for example, let's say, how do I know if someone is fit? I can look at numbers. Numbers means what is the body fat percentage, how many pull-up this guy can do, this person run 2.4, the timing is how much. So these are numbers, right? But usually, which one comes first? Like the numbers come first, or the before that, what must the guy do to have these numbers? The guy need to train, right? So the guy need to go gym, eat properly, have a good proper diet, right? So which chicken and egg, right? Which one comes first? Usually the exercises and all that come first, right? So the numbers is more of like a back check, right? If you do the proper work, then the numbers will definitely show up. If you train for your IPPT, then you might get goal. So when you get goal, it's the after effect. That means like it's the effect, but the cost is because you have been training regularly. So because you want to get your $400 for IPPT, you have been training, right? So the company, right, I want to make sure that it's doing well firstly, so that if you do a short filtering, is it like Google? We all know it's one of the top companies out there. Everyone use Google. It's a market, it's an industry leader, and it's on a good secular trend because it's in data, it's in cloud, right? So it's all the right areas. Okay, so make sure the company that you are in is on the right side of change. And COVID. So COVID is, I would say, is a polarizing effect. Is it affected by COVID, or is it actually doing better because of COVID? So I can argue that because most of us lock at home, we work from home, we spend more time online actually. Maybe I spend more time to Google on what YouTube videos to watch when I'm bored, or what Netflix video to watch. Yeah, so I'm spending more time. So Google actually, I would say, definitely will not be affected by COVID, and might actually do a bit better because of COVID. So you want to find companies that actually thrive in a good COVID environment. All right, so this is Google. So maybe I will show you maybe one example of one companies that using this filter that might not pass. So obviously I can find companies that are really, really bad, like maybe General Electrics. Like if I look at, so this is like a very extreme example. And later I will show you an example that is a bit more borderline. So General Electric, if I ask you what General Electric do right now, some of you might not even know. So it's not very, very clear. And if you look at the revenue over the years, like it's already dropping, right? So the key here is this kind of companies immediately is a no-go. Like why, I don't have to argue why the revenue is dropping over the last 5 years. Like over the last 5 years, there are so many companies that are doing much better, right? So why not I invest in these companies, right? So most of you will not invest in General Electric, but some of you might think of like, some brick and mortar companies like Starbucks, right? Some of you like Starbucks, and Starbucks is, one of the biggest, I would say, like coffee brands out there, right? And so this is very controversial, and sorry, I'm not sure if there's any Starbucks fans here, but from an objective investing perspective, right, Starbucks might not be on the right side of change. So looking at some of the filters I mentioned earlier, is Starbucks the top 1 or 2 players in the industry? Definitely yes, right? But is it on the right side of the secular trends? That means over the next 5-10 years, is there any like tailwinds that is going to move the industry forward? I would say not really, because this COVID might last for a bit longer. And if you're stuck at home, like if I'm at home, I probably won't order Starbucks. I just drink my 3-in-1 coffee, right? So it could be the same for some of you guys. So how does that translate into the numbers? So let's take a look. So looking at Starbucks revenue over the last few years, before COVID was actually doing okay. Even before COVID, let's say before 19, you can see it's not exactly growing that much already. Like, so look at growth before 2019, the growth rate is perhaps only 10%, which is a bit short of my 15% criteria. I would prefer a 15 to 20% trend, but it's growing at 10%, it's still okay. But if I can choose Amazon, Google growing at 15, 20, 25%, why do I want to choose Starbucks? And this is before COVID. Now, with COVID, you can see the revenue actually start to, I think this is the first time it dropped, right? Yeah. And I don't know how you pan out. So, there's more uncertainty for companies like that. So Starbucks is one of the biggest brands. I mentioned they have cash flow to tide over. And speaking of cash flow, right? So when the company is in trouble, usually, the cash flow is I mentioned the cash flow will be the first figure to drop, because I need to, if I'm at Starbucks right now, no one is drinking my coffee, I need to spend more money, and it will just suck up my reserve, my rain. So free cash flow is, look at it from, you can say it's a company rainy day fund or emergency fund. So you can see the free cash flow from 9,000 drop to 3,000 and drop to 100, and I do not want to wait to see what is going on the next 1 or 2 years. All right. So it's like a potential red flag. So I will use this free cash flow as a red flag to see, hey, the free cash flow is dropping, the company, potentially might be in trouble. So these are the 3 key metrics that, will give me a good sensing of, like, if I'm new to investing, I do not know what Starbucks do. At first time I get in, I can take a look and it will give me a good sensing of how well or bad the company is doing. Okay. So revenue, I make sure it's growing at a good 20-30% clip, and then it translate into net income. All right, so the net income must convert also, right? So you can see even before COVID, because with COVID obviously not doing well, but even before COVID, the conversion might not be that good also, right? Over here I think it's okay. Okay, so it does translate into net income, but with COVID it actually went negative a bit, right? So this is where, so if you have companies in your portfolio that you want to do like a 5-minute shortcut check, or if you have companies that you're eyeing, maybe you can use, hopefully you can find this helpful. Okay. And okay, also because for some of you might be investing in, how many of you want to learn a bit more? Like I will talk a bit more on dividends. Personally, I don't invest in dividend companies. Some of you will know, but some of you might be investing in dividend companies. There's some things that I will look out for if I'm investing in dividends companies. How many of you invest in dividend companies and want me to cover a bit more on the dividends part? Okay, not a lot of people. So just a quick one. So dividends, I will just look at, so you can see here they pay dividends, and every year the dividends is increasing, and usually shareholders will like that. Every year must increase dividends, right? The thing is, right, if they do not make enough money to pay the dividends, then what happen? Then the money come from, they need to borrow money, then borrow future earnings to pay, which is not a good, not a good way. So I will look at payout ratio. Dividend payout ratio means the dividend that they're paying, right, of which how many, in terms of percentage, let's say I make 100 million, right? If I pay out 50 million in dividend, then the payout rate is 50%. If I make 100 million and I pay out 60 million, then the percentage is 60%. All right. So usually this percentage, right, I like it to be as low as possible, because if it's too high, so for example, if it's too high, if I make 100 million and I pay out 90 million, so my payout rate is 90%. Right, I will have only a buffer. I only keep 10%. I only keep 10 million, for next year operations and all that. But if next year my revenue drop, and I need to increase my dividend, right? So last year I paid 90 million. This year I have to pay more than 90 million. I need to pay maybe 95 million. And previously I was making 100 million. But if my revenue dropped from 100 million drop to 90 million, and I need to pay out, a bit more, what will happen? I don't have enough money to pay. So my payout ratio will go more than 100%, which is not healthy, right? So usually I want this payout ratio to be as low as possible, 50-60% or lesser, right? And you can see as it start to go up, it's a potential red flag also, right? Like, do they have enough money to sustain the dividend payout? Okay, so this is just a bit on dividend. So yeah, so there's a 5 or 10-minute shortcut, I would say, right? So again, to summarize, look at the industry. Who are the industry leaders that in the area that you're looking at? So let's say you are filtering this company. You have this company in mind. Is it the one of the top 1 or 2 players in the field? I don't even look at number 3, 4, or 5, because as I mentioned earlier, if I want to invest in, let's say, the sport apparels industry, and Nike or Adidas will come to mind, right? And if I'm looking at Adidas or Nike, why would I want to invest in Under Armour? Unless there is a good reason. So not say cannot, but unless there's a good reason, that means you feel like Under Armour can outperform over the next 10 years, then sure. But if not, all things being equal, usually I'll just go for the top 1 or 2 industry leaders. And I want to make sure they are on the right side of change. That means, even without COVID, right? Like we are heading into, a future where there's so much changes. Are these companies positioned well for the future? Like what are the secular trends, right? That will be pushing these companies to the next higher heights. So let's say if you are into e-commerce, you might not be, or if you are in fintech like PayPal. Is PayPal the largest? Is one of the largest, but is it like really? Does it have a monopoly over, let's say, payment gateways? Not really, right? There's still Visa, Mastercard, Stripe. There's still a lot of other companies, but PayPal is doing not too bad also. Simply because, so it's not the largest, but simply because there is enough tailwind, the secular trends pushing upwards, right? And sometimes it's more than enough. So if I were to just go back to this sharing, and if I look at PayPal, it's also a company that if my context, in my portfolio is I'm just a newbie, just starting, don't have time to monitor, but I just want to get started lah. And if I want to find some very, very safe companies that their business is like very no volatility involved, like no ups and downs one, and PayPal might be a good start. Also, if I want to have a bit of exposure in fintech, because everyone knows like fintech meaning financial technology, like more nowadays banks are more online, right? So like revenue, PayPal is going nicely. They have quite a consistent gross profit, and does it translate into income, net income? Yeah. Okay. They don't give dividends. All right. So and then their free cash flow is also trending up. All right. So looking at the last few years growth, they are on a 17-20% year-on-year growth. So it's a very no-brainer. Like idiot can run a company, you know what I mean? Like you don't need to have because certain companies you need a visionary like Elon Musk to really drive the company. But for a company like that, it's very easier to run. So these are very simple business that like you and I can understand what does PayPal do, right? It's easier to understand than say what does Tesla do, right? So in relative terms, all right. So if I want to get started, if I'm a newbie, I want to get started, this will be my 5 to 10 minute shortcut to find these companies, and I will, I guess, break them down into different sectors. Again, this is where a bit of portfolio diversification coming in. You don't want to invest all your money on e-commerce, right? Not all on Amazon, right? So you maybe can put just maybe 4 or 5 big trends like e-commerce, then you can go for Amazon, financial, fintech, you can go for maybe PayPal. Maybe for 5G or cloud, you can choose maybe Microsoft. If some of you guys like it, Microsoft is quite big in cloud also. So some of your big tech companies using the FinViz filter will give you the companies, and then you just see and then if you want some social media, Facebook, I think is also a solid cash cow, right? Yeah. So you can go through this list and see what companies you like. If you don't like Facebook, then don't invest Facebook. There's no right or wrong here. It's just whatever is more comfortable for you lah. Okay, so this is really a bit more, I would say, for basics, all right? So if you're a more experienced investor, you might find not that relevant. But if you're a beginner looking to kickstart, don't know how to start, this would be a good way. Go FinViz, summarize, go FinViz, or any websites that you want to use. Personally, I use FinViz. I go filter the screener, and I sort by market cap. The biggest companies will come out, and I just go through that list. And when I go into that list, what am I looking at? I'm looking at, is this company one of the largest player in their particular niche, the particular industry, the top 1 or 2, right? So like Amazon is obviously one of the biggest, if not the biggest, in e-commerce, right? And is it positioned on the right side of change, right? Is there any secular trends pushing it forward? So Amazon, not just in e-commerce, right? They're also in cloud, AWS, and all that. So I would say they're very positioned very nicely. And thirdly, as a red flag check, will the business be affected? Has the business been affected by COVID? I can look at last year numbers, right? Last year numbers 2020 is already out. That's where the MorningStar come in. And also, I think about the business really be affected by COVID that much? Not really, right? Most people start at home. Actually, you buy more, you shop more online. So actually, e-commerce benefit from COVID. So when we have homework for some of you guys, right? Think about what industries will benefit from COVID one, right? Like maybe Zoom, like online, So you look at the industry first, and then you think about what companies are the top 1 or 2 players in that industry. Okay, so e-commerce, obviously Amazon for the US, and if you're in Singapore, some of you know one of my top companies is Shopee, like C Limited. Okay, so this is how you can think about the companies. So once you get a sensing about, okay, which companies are positioned well, then this is where we do a numbers check, right? So this is where the Morningstar come in. I'll go to Morningstar to take a look at the figures and 3 key metrics, right? Revenue, because like money is like the most important, like the bloodline of the company. So I want to make sure the revenue is not just, constant, but increasing. All right, I want to make sure, because for the stock price to go up, the company need to do better, right? And the revenue increase by 20-30%, then the stock price will increase by 20-30%, because that's why I'm investing after all. So I want to make sure the company is growing at a 20, 25, 30% rate, a minimum 15, all right, 15% year-on-year growth. And usually these big companies, their revenue increase, right, will be quite very little volatility one. Right? You shouldn't see like 1 year up a lot and then suddenly go down and then up again and sometimes negative. You should not see that. If I see something like that, then probably it's a red flag for me lah. So you should be going up. Then the revenue, the first key matrix, does it translate into net profit? So you can be a lot of money coming in, but you spend a lot on expenses, then no profit also. So is there net profit? And then lastly, right, free cash flow. Free cash flow, again, doesn't have to go up too much. Again, free cash flow I'm using, so like revenue and net income, right, I'm using it more as offensive metrics, offensive numbers, right? Like my strikers, are they doing well, or are my strikers scoring, right? But free cash flow is more like a defender or a goalkeeper. So it's more like a potential red flag. Like, because free cash flow, if the company is not doing well, usually free cash flow will be the first figure go down. So let's say, if using a personal example, most of us will have a rainy day fund. So if we run into some kind of challenges or problems, and for whatever reason we might touch wood, I might need to spend money, then I will eat into my rainy day fund, right? My rainy day fund will go down. So for companies, the free cash flow, another way of thinking of it is their rainy day fund. So if I see the free cash flow going down, means I know that the company might be facing some challenges. I can dig a bit deeper, why the free cash flow is going down. But in short, using a 5-10 minute shortcut, this is what I will be doing. And every time any companies I have, once a while, I will just take a look at the free cash flow, making sure it's like growing up state. Most companies, if they are growing, their top line is growing well, the free cash flow will not be parallel in terms of growth, because most of the time they will take some money to, like your rainy day fund. Even you are making a lot of money, let's say you make a lot of money last year, you will not keep that the same amount as your rainy day fund, correct? It doesn't make sense. You will use it to invest. So for the company, likewise, they will reinvest into the businesses, but they will just keep a portion. So the rainy day fund will go up, or at least be constant. Just make sure the free cash flow is not dropping severely. And I think that's okay. Okay, I think that's about it. All right. So in short, again, using FinViz to filter out the best companies, and then the 3 key metrics to give you a sensing of how the company is doing. Right? And you're not looking at a particular year, but you're looking more over a period of time, because let's say I tell you I can do 6 pull-ups. That doesn't mean anything. You want to know how many pull-ups I can do last year or last month, right? So the numbers can tell you a story. So similarly, if you look at just the last year revenue, how much Amazon is making, it doesn't make sense, right? I mean, like, you cannot make sense of the numbers, but you want to compare it to previous few years, and you want to see, is it trending up? Is it just going sideways? Is it trending down? Right? So this is where you get a sensing of how well the company is doing. So again, I want to make sure the company is growing at 20-30% clip. All right. So in short, that's about it. Hope you guys find this sharing useful, and have a good evening ahead. Okay. See you guys.